David Rockefeller said, "Success in business requires training and discipline and hard work. But if you're not frightened by these things, the opportunities are just as great today as they ever were." Brenda and I are Team 4 of the Simulation Project. When we started SMW Global Technologies, we knew there would be some tough days ahead. A lot of hard work goes into starting up and growing a business in any industry, and in the field of computer technology, with so many great competitors, it is especially difficult. Initially, Brenda's major responsibility was VP of Marketing, and mine was VP of Finance and Accounting. However, we ended up stepping up and involving ourselves more in depth in all aspects of the company, which has been a great experience. The decision-making process included decisions regarding team norms, from meeting expectations to confidentiality, agreeing on majority vote, market sampling size, and preliminary financial decisions. Our overall strategy is reflected in our mission statement, which reads, SMW Global Technologies, Inc. is committed to providing the highest quality personal and professional computing experience to consumers around the world. Our corporate goals revolve around this mission statement. Our ultimate objective is to exceed stakeholder expectations. In Q2, we studied the initial market research and made the decision to begin our product line by targeting the workhorse and cost cutter segments. We felt that the wants and needs of these two were closely related, and we could develop our personal computers to capture these specifications without having a considerable amount of required changeover costs. The next step was to determine sales office locations. To make this decision, we took into consideration the potential market size and the potential price willing to pay. We chose New York and London based on the numbers regarding potential sales. Once the optimal locations were chosen, we began implementing specific details by opening offices, designing brands, and breaking ground on our factory. Our factory location of Tianjin, China was chosen due to the cost savings that we could realize over the cost of producing our products elsewhere. We also felt the production cost savings would compensate for any additional shipping charges or other issues that might occur due to the distance involved. After deciding on our factory location, finding the right mix of attributes in the production areas was our next step. This has required much planning and balancing to keep our costs low and our production high. Aspects under continuing review include target inventory, replenishment points, projecting demand, and selecting appropriate stock levels. It also includes capacity, labor, and overhead issues. We began with two brand designs in the second quarter. Power Pro, designed to reach the cost cutter segment, and Smart Pro, designed to reach the workhorse segment, were both developed through the use of available market data. Taking into consideration what our target market's needs and wants were, helped us to really start out strong in the cost cutter market with 40% of the market share in the third quarter. Going into Q3, we felt we had planned well in developing our initial business strategy, but now it's time to put our strategy to the test. Going into the test market, we were ready to continue with our tactical details by staffing our New York and London offices, 4 salespeople per city. Additionally, we opened a new sales office in Chicago to be staffed in Q4. Our initial sales expense, which was $258,000, with potential sales of slightly over $1 million just in our 2 primary target markets. We made decisions about the selling price for each brand and developed ads and placed them in local and regional media. Our strategy was to keep our pricing low initially until our brand name could support an increase. Our graphs show our targeting in reference to media decisions. In the production facility, we were scheduling the production of the brands and using marketing research to make sure we had the consumer needs and wants in mind at all times during development strategies. We received some great feedback in Q4. Our market share for the cost cutter segment was a nice starting point for us. We maintained a 43% of the cost cutter and 12% of the workhorse segment. We staffed our Chicago office with 4 salespeople. In Q4, we opted not to add any new offices until we could get more feedback. We also increased our ad campaign. In addition, we focused on adding another brand, DynaPro, in hopes that we can improve our standings in the marketplace. The beginning of the second year proved to be the beginning of many adjustments needed to really find the right mix. We again added to our sales staff in Q5, bumping up our sales expenses to $366,361. We added offices in Los Angeles and Tianjin. While Tianjin wasn't as profitable as some of our other locations, because our manufacturing plant was there, we felt it was an obvious choice due to the lower costs we would incur. After reviewing the market research, we increased our ads to help produce more sales throughout all of the regions. We also used the available market research to move forward with the development of DynaPro Deluxe in Q5 to replace the DynaPro brand that did not seem to meet the consumer's needs as well as anticipated. We were also afforded the opportunity in the fifth quarter to invest some capital in new and improved computer components for our customers. We opted to invest $1.7 million in some new releases of Office software and $2 million in a Windows upgrade for professionals with high security. In Q7, we were able to absorb some of this cost by signing a license with another firm for $1,025,000. $100,000 was invested into improved changeover in Q5, and we also invested in inspections and source studies to help improve quality concerns. Q6 saw us losing some market share in the cost cutter segment, but increasing in the workhorse segment. Because the workhorse segment was more profitable for us, we continued to put a lot of focus in this area. However, we continued making changes we felt were necessary to keep SMW growing sales. We increased our sales force by 8, and the addition of the sales people and the new offices brought our sales expenditures to $565,329. Our next step involved opening a sales office in Toronto to allow us to get a start in the Canadian market. This added a potential of $14 million throughout the cost cutter and workhorse segment. By Q6, our advertising media budget was at nearly $400,000 to try and reach all the applicable consumers. At this time, we introduced our newest development, Max Pro. A step up from our current design, we added the improvements to the design that we developed in the previous quarter and felt that we could have a higher price point, keeping the DynaPro Deluxe at $2,899 and pricing our new Max Pro brand at $3,299. A $200,000 investment in improved changeover was made, and we continued to increase focus on quality improvements by assisting suppliers, using statistical controls, automating inspections, and controlling factors such as temperatures and humidity throughout the facility. In Q7, we took a big leap and invested a significant amount of our budgetary dollars in increasing our sales staff. We also added the use of sales incentives to help boost sales. Even though we continued to grow our sales force in existing locations, we still felt compelled to get into more markets. We added offices in Rio de Janeiro and Paris to get into the Brazilian market and also to increase our presence in the European market. Again, this move could afford us potential sales of $50 million. At this point, continuing to watch our competitors, we felt pressed to add more money into our advertising efforts, hoping that we could revive our waning market share. We literally tripled our advertising campaign in the 7th quarter. Extreme was a new brand design for us in this quarter. We added the improvements to the design and increased the price due to the added features and better overall quality we felt we had obtained by this point. Due to the added products, we felt it was necessary to invest another $300,000 to improve changeover while continuing to make improvements in quality through various programs that had been implemented. Q8 was an eye-opener for us. In trying to mimic our competition, as many firms do, we changed our focus and our market share dropped. While we will continue to invest in sales, as evidenced by our nearly $2 million expense in this quarter, moving forward, we will get back to the basics of taking care of our customers and focusing on research and development and reducing our prices back to an optimal level for our target markets. As Thomas Edison said, many of life's failures are people who did not realize how close they were to success when they gave up. We added Sao Paulo to reinforce our Brazil market. We also added a sales office in Shanghai, China to improve our presence there, and an office in Atlanta to ensure we were covered in the United States, our largest and most profitable country. We are confident that we can increase our market share throughout the various countries by moving into these additional locations. Additionally, with our advertising campaign at nearly $1.5 million, we feel that our sales and marketing mix will start to really show the results of the monetary expenditures. Smart Pro Plus was added to get ready to move into more target areas beginning in Q9. We feel that this design can move into areas such as the Innovator and possibly into the Mercedes market. As in previous quarters, we felt that investing an additional $150,000 to improve changeover was a necessity. We also increased focus on quality in terms of additional inspections, quality studies, and improvement actions. Two very important areas that we monitored and adjusted throughout our first 2 years include our production capacity and our financing. In regard to production, we set our capacity at 1,625 units per quarter for the first 5 quarters. We felt this gave us a good balance between what our sales and marketing teams were doing with the branding and advertising, and the load the production facility could handle with minimal additional costs due to shutdowns, wasted capacity, and changeover costs. We invested an additional $1.1 million and $2.1 million in quarters 6 and 7 respectively, increasing capacity from 1,625 to 6,500 units per quarter to help meet our increased product line as well as increasing demand. Recapping the overall accounting portion, we feel that the financial aspect of the business has always been and will continue to be a top priority. We began with some strong investments in the first 2 quarters to help build our cash for later uses. We have borrowed money from interested investors to continue investing in SMW. We heavily invested in R&D improvements as well as marketing. We continuously monitored our pro forma financial statements to enable us to better predict the best financial direction for the company and stakeholders. We have been investing in market research to assist us in making decisions that will positively influence our financial position. While our sales continue to grow over the first years of business, we believe that our strongest years are yet to come. Charles Darwin said, "It is not the strongest of the species that survives, nor the most intelligent that survives. It is the one that is the most adaptable to change." With that, I will turn it over to Brenda to explore the changes we will be making in the future to not only survive, but to thrive in the technology sector.
Thank you, Renee. I will continue on with some of the company highlights for the first years and second year, our future plans, and the lessons we learned from this project. In the fourth quarter, our balanced scorecard was used to measure our total performance. We mainly focused on financial performance and market performance, which will enable us to work on a strategy and enhance our performance in all areas. Although we mainly focus on 2 former areas, the key performance indicators on the scorecard include financial performance, marketing effectiveness, investment in future, asset management, manufacturing productivity, and financial risk. These areas have to be taken into consideration and are important when looking at the big picture. However, the difficulty with this is that one strategy will not produce positive results across all areas. For example, if a stockholder were to look at our performance, they will focus on our financial performance and financial risk, while someone in the marketing field will look at the marketing effectiveness and market performance. During our first year, we ranked high on the balanced scorecard in the areas of market performance and market effectiveness. For example, in market performance, we scored a 0.2, in a market effectiveness, we scored 0.63. SMW Global Technologies had obtained a 43% of the market share in the cost-cutter market segment, which positively influenced the score in these areas. These areas proved to be part of our strength. We still needed improvement in other areas, such as financial performance, asset management, that were our main challenge as we began to grow as a company. By the 8th quarter, or second year, we ended up having more challenge, especially because of the presence of the other competitors and a cash flow issue covering fixed expenses. This caused to obtain an emergency loan, which reflected poor financial management. We also did not produce our expected sales. In year 2, our strategy includes focusing on areas for expenditures such as improvement in sales force and expanding manufacturing, which were the most critical areas. This was accomplished by making use of the $5 million from the 5th quarter. We invest $4 million on improvement in sales force and more than $3 million in expanding our manufacturing. In the future, our strategy will include a lot for what was learned from taking a conservative approach. We plan to increase advertising and efficiently forecast our demand. We also plan to expand our sales force and open new sales offices in Atlanta, São Paulo, and Shanghai. We will continue to invest on research and development, which will allow us to create innovative technology and improve our current products. After reflecting on the project and the results, there were many lessons we learned. The first one is that we should look at the big picture and take the time to carefully analyze and evaluate all the necessary information, including the available market research. Being confident in decisions and being assertive on what steps to take is critical for carrying out the strategies. I believe that you should not be afraid of taking risks. One should also be a good team player and take all ideas into consideration. I remember that Renee and I debate a lot about offering rebates, and I was really skeptical about the strategy. But what may think is not a good idea could turn into a positive outcome in the end stage. This project also teaches to be be good team players and listen to each other. Although at times tedious and time consuming, it was a learning experience and all the parts of the project had meaning and purpose for our final objective. This concludes our presentation. If you have any questions or concerns, please put them on the discussion board for the Blackboard. Thank you.